Alright, what's going on, everybody? Saturday afternoon. I am sitting at my computer, just finished out typing up a bunch of numbers, catching up on profit loss, commissions, statements, whatnot. So, this is what it's looked like for the past 5 days of trading, past trading week. See, on the daily, I filled it out here. Obviously, the weekly is probably the best thing. Lost 93 bucks this month. It's 50% on the trades that I took. 2 winning days, 42 bucks in commissions. Overall, I'm down $135.70, which is absolutely disappointing because that Nvidia trade definitely cost me being green on the week. I probably would have been, well, it was 168 bucks, so I mean, 170 is probably like 60 bucks or something is where I should be at. Maybe should have been a small loser, so maybe like 30 or even $20 this week. And I mean, green is green. I would have liked to keep the streak going, but I mean, it was the first trade that I took that was one of my new strategies, the engulfing strategies, candles, whatnot here. I mean, you can see it over here. My dollars at risk was only 54, but I mean, that thing spiked up against me so bad. I don't even know what to do about it, so I had to change up my entry rules, more strategies, plans around it. So it's definitely been a while since I've done one of these weekly reviews, because you can see for the past really month or so, it hasn't been a single week where I've taken more than 5 trades. So I mean, back in early March, so I haven't done this in quite some time. If I'm only taking 2 or 1 trade a week, I mean, there's no real point in doing a weekly review if I'm only going to go over 1 trade. So I would just want to get right into it. The first trade that I took was Netflix. I believe it is this one here. Okay, I'm looking. Alright. So we got Netflix. No, it was a VWAP bounce up play. Sector was in my favor. Was long in it, risking about $111, so slightly bigger size than usual. So 135 wasn't that unexpected, I guess. Since at risk, profit target was there. I wasn't even profitable for a second on the trade, so let's see what happens. Alright, so I'm looking to get long. Looks like a really good trade. The 20's catching up on it. The 9 is acting as support now, so I'm wanting to see it bounce off the VWAP, take it long over the recent high of the candle, and long it probably back to 330 is what it looks like. But risk was relatively small. I think it was $1.11 that I was risking. Where's my risk here? 327. So cents at risk, I'm risking 89 cents here. 89 to make a little bit more than $1. So entries at 33. Everything else around it's really green, so sector, SPY, markets, everything's helping the trade. Alright, so I'm long. A little bit of buying in there. Not really too big a size or nothing. So right from the get-go, it's not crazy in my favor or nothing. I mean, this is a later in the day play, so it's not like a super quick scalp or anything. These trades can take a couple of candles to really start forming. So it's already starting to run against me, but it's definitely too early to cut the trade because you want to give it a chance to bounce off of it again if it's going to. It just blows through everything. It doesn't really act as support or nothing. So I mean, I remember it. It was ugly from the beginning, and once it just kept making lows, I just said, well, forget it. I was obviously wrong. So if it's not gonna take off, it's probably a fake out. I need to get out when I need to get out. So It's definitely a disappointing loss in this case because I definitely really like this one. But it's just one of those that's just not going to work. Trying to see where it ended up. And it just kept going lower and lower. It would have been a decent re-entry. I could have taken it long again if it broke out over the highs, but obviously never got to that point. So MRK. So yeah, Netflix is just a loser. Take that trade again the next day too. So just the way it goes. MRK was the one trade that I have more strategies that I am starting to play with. And MRK was the first trade that I was able to take on it. So hide this first. So this was on the 17th, right? On the 17th. So it's got a decent move up here, and we're just now breaking out above the 200 here. And you can see in the channel that I was in at the time, got the bottom trend line, copy and paste it with the top trend line, and what I'm looking out for is a breakout above the channel for the tell, and then the strategy is to draw a fib on it from the pivot high to the pivot low, and then you wait for that 50% pullback, which in this case was pretty much right at VWAP. So you can see a 46 and it's 48, so I definitely really liked it from the beginning. I mean, if the 50% line is right at VWAP, it just adds to the case more. Plus we got another pivot line up here too. So I just remember entering the trade, and I went full size from the beginning, but full size this case was pretty small because it was the first trade that I ever took with this strategy. So I mean, I wasn't trying to risk $100 like I usually do. I'm just trying to get a feel for how these trades are going to go, if there's anything that I need to adjust. So I mean, it ended up being a loser. I mean, from my entry, it got within pennies of my stop loss, which was 59.70. So I mean, once it failed here, I definitely knew that if it's going to break out above this little recent high, it's probably not going to be a good trade anymore. Plus, with the market being as green as it was definitely not helping whatsoever. So I told myself after this trade that I need to write these down too. That after this trade, if I'm trying to short something, the market should definitely be a good short. It should not be really green like it is right now. So I want to long when the market's green, and I want to short whenever it's red. For the most part. Depends on other factors, obviously, but channel trades should follow SPY plus market. And that's basically all there is to it. I mean, obviously another thing that I was thinking about is maybe doing half size here, and then adding again the second size just right where my stop is at, and if it breaks my stop, well, then I have only got half my position as a full stop loss, but then the second half, it's just tiny loss on that case. And if it does decide to reverse from my stop loss, well, then I got a really good, much better entry. Or on the other side, I could add it, and then I could add to the trade on a recent break of a recent low or something, and just follow the confirmation, as opposed to doubling down as it gets closer to the stop loss. So definitely, hopefully I see much more of those. I see a lot of these setups every day, really. I got a whole watch list here of just stocks that I run through each and every single day just to see if they're breaking out their channels, if they're going to set up or whatever they're going to do. So I mean, every day I see something, but it just depends on other things if I'm actually going to take that trade or not. Obviously, I only want to be taking the good ones. So on April 18th, I took an opening range breakout down on AMAT. 500 shares, risking 120. My RR is a little skewed on this one. So right off the bat, I noticed we're pretty far away from VWAP. It's an opening range play that's almost 10 minutes into the day, which is a little unusual for me, I guess. In the most cases, I trade these on the 5th minute, the 6th minute, or the 7th minute. But either way, it looks really good. I mean, got a failed retest, didn't even move higher at all. There was something about this one that I think there was like support or something almost right underneath it. 70. Well, let's check. So this was this day. This was this day. So I was taking the trade right about here. Obviously the whole number in most cases ends up as a support or resistance point. Yes, it was. Okay, so right about here is where I was thinking there might be some issues. So definitely, as it got to this whole number, I should be looking to take off fairly quickly. So I'm in the trade. Definitely a lot of red right from the beginning. Following Andrew Aziz style, saying big numbers on the bid is actually bearish instead of bullish. And so far, ever since I've really started paying attention to that, I think he's right. Whenever you see those big numbers start showing up, they usually get filled more often than not. Helps drive the price down. The only thing that I wish I could see is more level 2, because on his, I think he uses a DOS Trader Pro or something, and he can see a lot more on level 2 than what I can see. Because I mean, this isn't really super relevant, but he can see plenty more than I can. Alright, so the initial break was alright, slightly above average volume. Definitely way too early to tell myself to not hold on for retest. Actually, I want to see what is my risk. Didn't even look at it. So 55.40 was my risk. So kind of in the middle here. Because opening range plays, they're supposed to, it either does or it doesn't. So make my risk small. So usually when I take 500 shares, I'm looking to get 20 cents out of it. So I'm probably holding for a break underneath the whole number before I start taking any profits. Still not telling me anything wrong yet. There's a push down. Close to the whole number. Got a break of the whole number, and now I should be looking to take partials. Plus, with the way that the daily and the 15-minute was set up, there's not too much conviction that it's going to go lower than what it already has done. So it is 55. So I mean, you can see all these past points here where it's been acting. So I mean, if it's going to break, I should be looking to get completely out around now. I should have kept taking partials down there, but I think what I was telling myself is, alright, we got a pretty good break off of above average volume, so I want to hold it for a retest and see if it wants to start moving even lower, because I did like that volume. I haven't really been paying too much attention to the SPY, so looks like the SPY has actually been rising since I entered this trade. Only a little bit though, not anything too significant. And then it goes all the way back to my entry and stopped out. So I think the mistake on that one is I wasn't aware of this level too much. Obviously, it eventually did move lower, but with these plays, I'm not holding on to this thing for 15 minutes trying to see if it's going to go super low or something. So I should have been a little more aware of this level, that if it is going to break that 59, it doesn't really have a reason. There's no really significant case points telling me that, yeah, it's definitely going to break and go lower from here. Because I see this acts as really good resistance for a couple days in here, and then obviously it changed right back to support. So once it gets back down there, it's going to be a level of some kind of something. So I should have been a little more cautious about holding on to that trade. Alright, so 15-minute chart told me to be aware of the level, and I held through, and it stopped me out. I should have just gotten all out as it got down to that level. I think that was the only trade that I took that day. Yes, it was. Alright, so next day. Thursday. Thursday could have been a really nice day, but it didn't. So NXPI was the first trade that I took. Gap and go down off of the third or fourth candle. I remember it's definitely a high price stock. Floats fine, volume's fine. Risk, so I am risking $150 on the trade, and I am risking 26 to make 15 cents. Well, 15 cents to $100 stock isn't anything. And if I remember right, my issue with this trade is I took way too big a position size to start with, and I immediately turned right back around and said, okay, I took way too big a size, and I think I cut a partial relatively early. Also, you can tell the quality on this video is 20 times better because I figured out there was something wrong with my rendering settings in Sony Vegas. So fix that up and it's much nicer to look at. Third candle is not going to happen this minute. So I definitely like what I see already, is that you get that inside candle, like it's gaining power and ready to break down or something. So I'm looking to get the entry right at 79, should be getting filled in the next second. And right away, I'm already, well, not right, is it going? No, it's just going really slow. So right away, I immediately recognize, okay, I took way too big a position size because this is a $110 stock with a pretty big spread in some cases. Like right now, it's already an 8-cent spread, and 8 cents on 600 shares. That's $50. That's half of the risk that I usually take. So right away, I'm like, okay, I took way too big a size. And unfortunately, this is the first time this has ever really happened to me. So my first reaction is, okay, I might need to get out of this trade completely, but a better idea is to just lessen the size up, lighten up, reduce my risk, just in case the worst could happen, because that could have easily turned into a $200 loss. You can see the next tick down, I'm already back, gave me back $60. So then when it starts moving down a little bit more, it was relatively slow too. There wasn't as much volume as I would have liked. It's a good looking candle, but the volume definitely is an issue, but I still want to give it that chance, so let it run a little bit more. Hold on a second. I'm not trying to get 15 cents out of this trade. I said my profit target was 109.60. So I was kind of right in the middle of everything. Profit target was 109.60, but obviously it could go a lot further. I think it was just 109.60 because of my risk. So right now we just got a nice little drop down. It is well below my profit target, so I should immediately be looking to take some off. I haven't yet, I just did now. I like the break, so I want to hold on with a little bit more. And 200 shares with a $110 stock is still pretty big size. 50 cents is another $100. So after I get that pull out, or that pullback, and then I get all out. And something that I want to look at is if this one was also around a significant daily spot or something. So this was on this day here. And I was looking at it at about 109, 110, 109.50-ish. So looking back, there's not really anything. 110 was definitely a spot, but after that, there's not really anything down here until 109. So I probably could have held on to this a little bit longer to see if it wanted to test the whole number. But I was relatively happy with what I had, so pretty decent move, and after, you know, it's pretty slow. So I was good with that. I shut it off too early. Let's go to the 1 minute. This was it here. So it did have a pullback. Yeah, it took a little bit longer. I do remember this now. I was looking at this for a opening range play too. An opening range breakdown. You get these inside candles and then get that really nice move down and then big squeeze back up. Probably right to where my entry would have been. If I did take that opening range breakdown, I don't know if I would have held through that to see something like this. I'm just really not sure. I probably would have taken... Well, let's check my notes, because my notes tell everything. So on NXPI, I had 109 as a level, so I probably would have taken this, risking another 20 cents to make 20 cents. So I'm sure I would have been mostly, if I wasn't all out, I'm positive I would have gotten out completely on that spike back up. But it was another case where I guess, you know, hold on a little bit longer, you know, have that patience, and it would have paid off for this one trade, but it is what it is. So I remember a bunch of other stuff to look at. Then I ended up with NVIDIA. So the thing with NVIDIA is I hadn't taken an engulfing trade yet. And NVIDIA was the first one that I told myself that I was looking at. So I actually, that's kind of a weird way to do it, but when the stock was right here, I was looking at it saying, okay, this could be a really good case for one of the bearish engulfing patterns that I've been trying to look for. So if it gets down, if it breaks VWAP and it closes underneath this level right here, it's probably going to be a good engulfing play to take, and it did exactly that. So I told myself, alright, this is going to be the first engulfing trade that I take. If it comes back to VWAP, I'm going to enter in with a stop above, obviously, VWAP and the 9 EMA, wherever it may be at the time. Come on. There we go. What's happening? Oh, my video. Alright, well, the video's good now, so... Yeah, alright, so I entered in, pulled back a little bit, and I entered in full size right there for the NVIDIA trade. And whenever I took this trade, I wanted to risk $50 because it was the same case with that MRK. Wanted to have a small risk because it was the first time I ever took that strategy and didn't want to do anything crazy. It's almost like a test trade, really, you know, just kind of feel it out, see if there's anything that I need to change with my entries, and of course there was. So I had no intention of even being down this much money on the trade already. But I mean, I entered in and this thing just really faked me out. because I was definitely too aggressive with my entry. Even waiting for that pullback was too aggressive. I mean, I guess really aggressive would have been shorting it down here, but in the same case. And they just get these crazy spikes, and I just said, well, forget that. I was up $157 on the day. Now I just gave it all back and then some. So that was definitely really frustrating. So what I decided on these engulfing plays was that obviously I needed to change my entry rules. Where are we? Obviously I need to change my entry rules on this. So I came to the conclusion that I should do half size on the first VWAP test, and I should add back into the trade on the break of the low, or in the same case with that MRK trade, I can add up near my stop loss, and if it breaks that stop loss, then I get out with a small loser, because still same thing, always trying to reduce your risk, increase reward. So that would be how I would do it. Just split my entries up on these trades, because these trades, I take breakout trades really all the time. These kind of trades with these MRK, you're kind of like trying to catch a top, or you're trying to catch a bottom, and then usually, more often than not, the stock runs against you a little bit, and you just gotta kind of deal with that. That's just because that's how the rate or the entries are based on. Like, my entries are based on breakout price points, and whenever I enter in the breakout trades, I expect price to break out immediately. Whenever I enter these kind of trades like this in MRK, I'm not expecting price to just immediately reverse or immediately turn around or go straight in my favor or something. You can almost kind of expect these ones to run against you a little bit. So that's just something that I realized, you got to take one trade and learn your lesson and figure it out from there. So it was just an expensive lesson in this case, which is unfortunate, but it is the way that it is. So next time I see one of these engulfing patterns, I'll be trading it a lot more carefully, I guess, because I'm not expecting to get full size here and hold on through all of this just to see if it's gonna go through. I'm checking to see if it's gonna work in the next 5 minutes, and if it's not, well, then I'm gonna get out and look for the next trade or something. So that's just kind of where I'm at with the NVIDIA stuff. I should write that down too. Alright, and the last trade that I took was JD on 420 for an opening range breakdown again, risking 20 cents to make 25 cents. Ended up being a decent trade, but I remember there was something else about it. Looking at Twitter never set up. Looking at JD looks pretty good. So ignore this first candle. It's Lightspeed mistake, error, or something. I don't know why it does that. But got a very nice drop. Pulls straight back. Pulls back down again underneath VWAP. Get a small little doji candle here. And then I'm telling myself, alright, well, if it's going to break down here, it's definitely setting up for another good opening range breakdown. But there was a thing with this one. I've got support levels at 36.55 and 37. So we're already underneath 37, but this 36.80 is acting as a problem. So I remember going back to this, I kind of had some confusion with some stuff, because you can see on the daily's got this trend line here that's going to act as a problem around 36.75-ish. And then if we're going by the candle bodies, then we got this one that's a little bit higher. But if you change this to the 15-minute chart, this trend line that's going down, this is still the daily one. And you can see it's much lower now. It's 36.70-ish. So whenever I took this trade and it was bouncing around at the 80, there's really not too much space. I don't really know exactly what happened. I must have drawn a line a little off or something that made me think that this risk was a little bit, or the support line was lower than what it actually was. So I took this trade at 80, and the next spot is 10 cents away, possibly 5 cents away. So honestly, I think I got pretty lucky in this case. I took it down from 80, or 79, 77. Still waiting for the break of 80. Below the pre-market levels, which is good. Come on. Any second. Alright, so we got the break. Great, gotta go back. Alright, got the break. Plenty of tape in my favor there. Tons of red, tons of green. Everybody's trying to get into it. Or people are trying to get out of it. And immediately this is the 70, which is probably going to be a support point. But it didn't act like it. We broke underneath it, and it just kept going. So now we're 65. I think I told myself I want to stay under 60 before I start taking any partials. We get under there. Still moving, and I wait for a small pullback to really get me out. So right there, click the button, comes back down again, kind of fails again, click the button. Down at the lows again, fails again, should click the button. And then that's when you start seeing the spike there. So then, now I'm thinking again, it's the same situation with the other two trades that I took where I just wasn't too aware of the levels that I was trading at, where the stock was at. There's no reason that I should be holding on for more size on a pullback because higher time frame telling me there's no reason to expect that this stock is going to go any lower. So I tell myself, well, I'll just cut the rests at break even again. And it gets there. Just grinds back against me and then I stop out. Just giving away too much money. I mean, it depends on the situation, because you know, if I'm just looking at this, yeah, this is a pretty good one to hold on for a retest or something, because you got above average volume, volume's increasing on the down. Had a nice little break. The tape was in your favor. It's a red day. I mean, everything else is in your favor. But whenever you're looking back at the higher time frames, nah, there's no reason. So stop out. That's just the way it goes. I don't know what it did the rest of it. Looks like it spiked back pretty hard. Which, you know, this is what I would expect. Is, you know, this level acting as support, and that's what it did. Traded sideways for the rest of the day. So just another one of those cases. So that was it on the week for the trades. I feel like the biggest mistake that I made this week wasn't really a mistake that appeared that much, but it was just a lack of focus. I felt slow. I felt like almost like there was just too much to really take in at once. I had, you know, there were some cases where some days I had like 8 stocks on the watch list. You know, maybe that is a case where I'm just, from the morning I'll chart things out, and then if it doesn't set up, I'll throw the stock out, won't look at it for the rest of the day. But whenever, you know, you're keeping in mind all of these things, and then I'm looking for trades within the first 3 minutes, so there's tons of information to sort through within the first couple minutes of the day, and I feel like that's kind of slowing me down. It's making me not pay attention to levels as much. You know, there's a few opportunities where I should have taken, you know, everything off, as opposed to waiting for, you know, the retest, the pullback, and everything, because there's good times to wait for the pullbacks, and there's bad times to wait for a pullback. And there's times that you shouldn't wait for a pullback at all. And, you know, there was a couple of trades here. Shouldn't have waited for a pullback at all. So, like a Matt and JD here, those are the big ones. So, other mistakes that I made, channels should be following the SPY and the markets. 15-minute chart told me to be aware of a level, and I held through, stopped out, should have gotten all out. Happened twice. Focus on morning trades and levels. and engulfing entries. So, I mean, you know, plenty of stuff to work on. I have my weekly review here. I'm going to start typing that up. Definitely. I'll be putting it a link down below. Read it if you want. Don't read it if you want. There's probably not going to be too much in there that I didn't already speak about in this video, so just stick with that. Definitely excited to go back to trading. Just got to be a little more focused, a little more aware of stuff. I mean, I got everything on me in a big notebook. Maybe I should bring out some note cards, and each individual stock can have like a note card or something. Maybe that'll help. I don't know. Just flip to it really fast. Maybe I could organize this a little bit better. I've been doing the same thing for some time now. I think there might be a little bit better way to read this. I might look into that one too. So definitely excited for Monday. Come back, fresh start. Looking to keep the month green. I think I am green on the month so far. Am I? Total minus the commission. I have made $7 this month. Great. Alright. So yes, I will be back on Monday looking to make some more money. Thanks for watching.